Hey, what's going on, guys? This is Terrence Ray. I'm back at you with another stock market update, weekend edition. Last week we had some nice movement, some nice volatility in the markets. I say nice because it's always a good thing to get the markets moving, so you can actually do some trading. And when the markets move, is your best opportunities for you to make money and also your best opportunity to lose money. Got to take the risk in order to get the reward. So without further ado, let's jump right onto the charts. We're gonna take a look at the SPX first, so we can get the expected move, which is right around 86. We'll make it $87 to be even. That's right around the range that it was last week. So which is letting us know that hey, we may have some fireworks this week. And basically, I just have this ruler right here, which I'm on the TastyTrade platform, and you can see this ruler on the option tab on the option chain, and I have it placed on the chart, so you can see basically if the market was to go up to the top of the range where that will put us and to the bottom of the range where it will put us. Now last week we went outside of the range to the downside, and I remember telling you guys in last week's video, if you go back and watch it, anytime you get down to the bottom of the range and it breaks through, look for a bigger move, and that's what happened last week. So we went outside of the range, and for 3 weeks it was inside, and then it broke out. And basically, I'm going to show you. I have the S&P 500 up, but I'm going to show you the XLF and the XLE, and I'm going to show you. We're going to do some wave analysis. So basically, from this low right here, which was back in October of 23, the market marched higher. So as far as I'm concerned, that would be a wave, the way I count, from a low to a distinguishable high. And if we were to put this on the weekly, this is what it would look like. And it would be really easy to see that this was kind of like a straight march. So once I put like a drawing on, so let's say what I would do is put a retracement on I would go from bottom or low to high. Let's tighten it up. And then right there, you can see, now if we go back, let's go back to the daily, and you will see that the market hit right in here and then look like it's breaking through. So I would bet, and I am a betting man, that the market will continue to go lower. That doesn't mean that we won't get some chop in here. Maybe it'll come back and retest this area maybe on Monday or Tuesday. But I do think that ultimately we'll get down around to this level right here on the Fibonacci retracement. And so basically, this is just a retracement of this move from this low to this high. And that's a natural. I'm going to show you that on the XLE as well. If we get a retracement in here, we'll start looking for, or at least I will, a reversal in this area. And the only reason why I think that we'll continue to go lower is because I'm also coupling this with the VIX. So while we're getting this downward move in the SPX, if we jump over to the VIX, we'll see that as we're getting a down move in the S&P 500, we are getting an up move in volatility. And I still have levels to go in the VIX, which I'm using a similar wave count. It's harder to see in the VIX because of the way the VIX spikes. But I'm basically went off of this Harami right here, and I took a up move. And if I was to go down to the hourly, it looks a little bit cleaner to here. And you can see that this is a real level because in the VIX, we got wicks right here. Got a wick. So this level held for about what? 1, 2, 3, 4, 5, 6 days before it broke out to get to this level. Then you can see this real big long wick, and it chopped around here for a week. And then in one day, it went up there and hit this, right? This level right here, and then it rejected. And so we ended the week on Friday with this rejection. Generally, when we get to this level right here or right around, this one or the next one is where we begin for the mark for whatever you're looking at on that particular ticker. That symbol will chop around this 2618. And if we get some more chop here, that's going to coincide with a little bit of chop around in here. So this week, we may get a little bit more downward action, but I expect somewhere once it gets here, I expect us to get some chop and some sideways action. And with an elevated VIX, it's still a great time to sell premium, right? I would not be a buyer of options. I wouldn't even buy puts. When you have a VIX this high, or at relatively speaking to what we've had, and when you have IV ranks and all of these underlines, now be careful because earnings are coming up. So you might want to, if you're not experienced with trading around earnings, definitely I wouldn't trade around like Netflix blew through the expected move. So you're getting outsized moves in these underlines that have earnings, which you could see that more in future underlines. So you might want to do, if you are trading options, you might want to do define risk spreads. And I would definitely, meaning if I was like Netflix has already had its earnings, I would definitely be way outside of the expected move. Like if you're going to trade Tesla, now Tesla has already been beaten down, but still, let's go and look. So it has its earnings on the 23rd. And this is what I'm saying. I'm definitely, if I'm in like doing something in Tesla, I'm definitely outside of the blue dotted line. I'm definitely outside of one standard deviation. So if you're doing anything, let's say you're doing a strangle, you got to be outside of there. Got to be somewhere 167.5, or maybe you want to do a whole number. I'd say maybe 165 even. And then you got to come down here and sell something like maybe the 125. You can do some crap like that, sell some junk. And that just puts you outside, and it still could go and blow past that. I would stay away from trading the earnings cycle. Um, Me personally. Now you could do something if you buy the options, which is going to be expensive. You might just want to sit this earning season out based upon what we're seeing. Now I want to take a look at the XLF. Keep the XLF and the XLE on my watch list because I do that because let's look at the chart. You look at the XLF. Now let's go back to the SPX. You're going to notice that they look similar, but the XLF has already turned up a little bit, right? No pun intended. But you see right here, you have a Harami. It's a Harami candlestick pattern. And based off of that Harami, we got one update, then we got two updates. And now this on Friday was a nice green candle. Now I'm gonna drop down to an hourly because I want to see what it looks like on an hourly. Now we got a nice little trading pattern here. Um, we got a nice up move and a pullback. I probably could throw some fibs on it, but the reason why I'm showing this is as long as the financials are going up, we won't get a big sell off in the market. So we got if the XLF is going up, and I could see it, you have a gap up here. So if it's going drifting up, then I could look for a little turn in the S&P 500, which is why I think we could get a little lull in the action this week, at least for a couple of days. Once we see the financials begin to roll over and turn down some more, then we could look for equities to do the same. But I think that financials alone can keep the market held up. So you can see This chart looks just like the S&P 500, almost identical, except for one is already started to turn. So that's what leads me to believe that we could get a little bit of sideways action. But let's see. Let's take a look at the XLE. And the reason why I wanted to take a look at the XLE is because the XLE is actually, excuse me, in a impulse move, or it just concluded one. So in the world of Elliott wave, we're doing wave. I'm gonna do a wave count to show you guys um how you can kind of keep track um, of the market when you see these moves. Down here, we can see that this is a distinct that we can like look at this and say, hey, a low was put in here. Look at that hammer candle, and for 4 days it sat there and then jumped up. We got a up move, a pullback, and then a dart. Now let's look at on the weekly. You can see it right here. We got about 8 straight candles of up moves on now these are weekly candlesticks. And right around, between 6 to 8 is when I start looking for pullbacks. I don't care what the underlying is. Right. And so right here, we can see I will go from this low to this high. You say, why this low and not this low? On the count right here, this will be your 1. This chop will be your 2. And this will be your 3. And with this being your 3, with this pullback here will be your 4. Now I'm going to show you, I'm going to draw it in, and then you'll be able to see it. Once I put my Fibonacci extensions on, and you're going to see why this makes sense. 1, 2, 3. Now remember what I said, when it gets to that 2618 is when we start getting the chop. You see? Now I'm going to take the retracement off so we can just see the extension. And boom. And you can see right there that this held. And you can see on every level up, you see this right here, got chopped. Right here, this candlestick gapped up, moved toward this level, chopped the next level. Now, once we get here, so this will be 1, 2, 3. The 3 is like the biggest move. And then we'll get a 4. You never know how long the 4 is going to last. Generally, I like to see my 4s pull back that right around to the 1618, which you can see that is look like it's trying to do. And then we should get something, another move up higher. It may even end here or here. Now, with that being said, if energy goes higher, we should see oil go higher. That should drive inflation. If once we see the XLE bounce and move higher, then we'll go to the energy sector. Now, so if you want to find something bullish to trade, like you want to find something to buy, being as that XLE represents the energy sector, you will come over here and let's look at energy stocks. You see how everything in the energy sector, except for one, is green. This is a way this is how you find trade. This is how I found stuff to trade or stuff to buy. You find a sector that is moving up and to the right, and then you drop down in that sector and drill down and find stocks within that sector that looks good. Now look at all these stocks in that sector look similar. Look at this is Exxon Mobil. This is Chevron, ConocoPhillips. What do these all have in common? I think I just went through oil stocks, right? We have a conflict going on in the Middle East, which could affect oil prices. So if you're gonna pay more at the pump, you might as well make some money on the stocks to offset that, right? Look at Kinder Morgan. Now, once you come here, you look for whichever chart looks the best. But for the most part, these stocks look good up and to the right. Phillips 66. I don't know about this one right here. I had to do because it looked like it may be breaking a trend line right here or right here at a trend line. SLB Schlumberger. Now Schlumberger is down, so this may not be one, but all the rest of them were green on the day. Look at this one. What's that? MPC. What's that? Marathon Petroleum. VLO. So if I'm looking for something to get long, that's if I'm definitely looking in the energy sector, and I'm definitely looking in the financials. If anything is gonna stop the market from tumbling, it's gonna be those. So, hey guys, if you got something out of this video, make sure you hit the like button, subscribe to the channel, and let me know what you think. With that, guys, I'm gonna be out. Peace.